Good morning. After Friday's equity bloodbath, we're at the start of a new month. Janet Yellen tried to calm investors on Sunday, telling NBC that Joe Biden's spending plans would not cause inflation and that jobs and family plans wouldn't come into effect until the economy was back on track. U.S. indices were led down on Friday by the Russell's 1.3% drop. Core personal consumption in March, personal spending and employment costs all improved. The Chicago PMI and Michigan U sentiment indicators all improved nicely, while Canada's GDP reading for Friday surprised to the downside, climbing a mere 0.4%. In Europe, only the FTSE managed to claw on to a 1/10% gain, all other indices in the red, bar none. Currencies are flat after most April CPIs show a slight improvement in consumer inflation, and Germany's Q1 preliminary GDP surprised to the downside quarter on quarter. ECB Vice President Luis de Guindos has told La Repubblica that he intends to begin phasing out emergency stimulus plans provided vaccination hits the 70% mark and the economy begins to speed up. A UN conference in Zurich over the weekend reports that online sales during the COVID lockdown have surged to a fifth of all retail sales. Foremost amongst web shoppers are the South Koreans at 26%, followed closely by China, and Alibaba leads the race for sellers, followed by Amazon. Asian markets are red this morning, except China, which is flat on Labor Day closures, and Australia's ASX a fraction above zero. New Zealand's Dow is down after PM Jacinda Ardern this morning joined the fray against China. Despite being the destination of almost a third of its exports, the New Zealand leader said it would be very concerning to her if economic impacts were the reason not to criticize Chinese human rights policies. With the Australia-Yen pair, we can imagine ourselves entering a 20-pip range, but if we somehow break above 84.70, the Aussie just may be in for a bit of bull. The RSI is negative and we're struggling with our 20-hour moving average, but we have quite firm support at 84.20. Tomorrow morning at about 1 GMT in the morning, and as I said, that's in less than a day's time, Australia will be delivering its March trade balance and expectations are for a $500 million increase. Alongside China's manufacturing PMI, we should be getting some firmer indication. Ethereum just broke above the 3K mark and seems to have quadrupled its value since the beginning of the year. More and more decentralized payment firms are adopting the technology as Bitcoin struggles to catch up. Meanwhile, oil tried unsuccessfully to break above the 64 mark on Friday after the Baker Hughes count declared a one-rig drop in oil rigs. It lost the day's earnings and starts the week where it began at 63.30 as COVID decimates Indian demand. And gold finally broke above the 1770 level overnight as bond yields begin to retreat. This chart of 10-year bond futures show that we've been steadily downtrending since that mid-April high, and we tapered off as the month turned this weekend. What that's done for gold is give us that slight upturn backed by volumes and an optimistic RSI. Even the moving averages turned hesitantly north. Our pivots for the coming week are a bit lower, so we have less to climb before setting a target, 1786 in this case. Again, we have U.S. March manufacturing data today at 2 p.m. GMT. 3- and 6-month bill auctions at 3:30, and some words of comfort from Powell at 6:20, so keep your eye out. Berkshire Hathaway's announced a $6.6 billion share buyback after saying earnings were rebounding from the COVID pandemic. The company announced a $4,572 earnings per share on revenues of $63.54 billion, as head honcho Buffett admitted that selling Apple the previous year was a mistake, but that he still considered Chevron a good buy. That company Friday delivered its first profit in a year, missing expectations slightly with $32 billion in revenues. Exxon, on the other hand, soared past expectations with a 5.3% year-on-year increase in revenues and earnings. while in Europe, any profits nearly quadrupled on revenues at $17.5 billion. You'll notice that share prices came down nevertheless. Colgate sales were up 6% to $434 billion. AstraZeneca surprised to the upside with $7.32 billion in revenues. And Barclays revenues were up to £5.9 billion, with BNP Paribas also past analyst hopes to 11.23 billion euros. Alibaba will be reporting to the New York Stock Exchange today alongside Estee Lauder. In the UK, it's Clavel's favourite CFD Jardine Matheson, fresh from its $5.5 billion buyout of the Jardine Strategic Holdings unit, subject to approval in Bermuda. No data anywhere on what to expect, but a truly fascinating story that company is. I would strongly advise you to read Noble House as soon as you can. Till then, see you all tomorrow.